For more on Facebook's IPO, let's bring in Anupam Palit, head of research at Greencrest, Capital Management. Anupam, nice to see you.
Thank you very
much.
Good
morning. Let's talk about the valuation here. As Sara said, the show stealer, you might call it, in Facebook's IPO filing is this potential valuation at $35 a share, $96 billion. You've crunched the numbers yourself and come up with a valuation that, at least on paper, is lower.
Yeah, our valuation is $75 billion on the company. So we believe that, the guest you had before who mentioned Francis Gaskins, who mentioned that we might see the initial pop. I think we are going to see the initial pop. I think they will achieve toward the high end of the range. But we believe after the initial pop, you could see some of the enthusiasm wane and the valuation come back down to earth. So our target remains $75 billion.
Well, how did you calculate the valuation? What are you looking for that indicates a lower number than as high as $96 billion?
Well, I think in order to get to the high end of the range, there's a couple of things that you have to believe. I think it's possible that Facebook could do that over time, but you'd have to see real evidence of it before we get too excited about it. The first thing is to see better monetization on the mobile platform, which they haven't done a great job of doing.
But they say that
yet.
That's what they're working on.
Of course, that's what they're working on. It's how much you want to give them credit for it before you actually see some evidence of it. The second thing I would say is that they need to do a better job of monetizing Facebook credits outside of Zynga. Right now, everything that they don't do, everything that they do outside of advertising is essentially Zynga credits. We would like to see more e-commerce on the platform. Some of the Warner Brothers movies that are being streamed, some more purchases on the platform. Once we see some evidence of that, I think we can get more excited about valuations at the higher end of the range.
And their presence in North America is certainly impressive. You're looking at average revenue per user. Outside of North America, in places like Asia, where growth prospects are higher, they're not as deeply penetrated there. What about China, where they barely have a presence?
Yeah, absolutely. I think that in order for people to really believe the Facebook story, you have to believe they're going to be doing better in international markets. The bad news is they certainly monetize a lot better in North America. The good news is that the markets outside of North America are growing very, very fast. So if you think about revenue per user in Asia and the rest of the world, it is about a fifth of what it is in North America, but it's growing 15 to 20% versus about 8 to 10% in North America.
When we talk about their ad sales that aren't even close to a Google, do you think potential investors are actually going to look that closely, or they just want to be in the deal because guess what? It's Facebook.
Right now, I think when you're talking about the next 2 weeks, 3 weeks, 1 month time frame, people just want to get in on the deal. That's the feedback that we're getting. Longer term, people are definitely going to start going through those ad numbers in a lot more detail. The feedback that we get constantly from advertisers is that it's interesting. We know a lot of people look at our ads. We're not exactly sure who's looking at our ads. They need to do a better job of parsing the data and delivering real audiences to advertisers. Over the long term, that's what's going to make a difference.
Anupam, tell me what you think it shows that some of Facebook's long-term insiders, the venture capital firms that have been behind it, the Greylocks, the Elevations, the XLs, are potentially, if that green shoe option is exercised, selling a significant part of their holdings.
Yeah, I think, that's pretty much par for the course. I think the idea is that this type of IPO is going to be an exit opportunity for these venture capital firms. They invest early on, they invest in ideas, they invest in entrepreneurs. Over time, they need to see a return on their money. In a lot of ways, this is going to be the best investment a lot of these firms ever make in their history.
Wait, so in theory, these VC firms who believed in Facebook and the idea from the beginning are going to cash out, and then investors who don't necessarily know what's in the books, who just love Facebook and are going to buy in, and they could be the ones holding the bag here.
Well, I think that, it's a question of private markets versus public markets. If you're going to be a public market investor, you're going to have to rely on the filings that you get. You're going to have to do your own due diligence. You have responsibility to your own shareholders that you have. You're going to take part in the IPO roadshow right now. I don't think you can expect the venture capitalists to be able to hold their money inside a particular company, whether it's Facebook or another company, forever. They need to see a return on their investment, just like every other shareholder does.
Anupam, thanks for joining us. Great to have you here so early on a Friday morning.
Thank you very much, my pleasure.
Anupam Palit here with us to talk about Facebook.